Well, even if inflation starts to track downwards, as it's supposed to, the great debate over wages is only intensifying as each month goes by. We've heard from the trade union movement on this program. Now we'll hear from the business lobby. We spoke to the Chamber of Commerce and Industry's Chief Executive, Andrew McKellar. Well, Andrew McKellar, we had your ACTU counterpart on the program yesterday, so thought it only fair that we get you in for a bit of a business perspective. Minimum wage case is before the Fair Work Commission. 7% is the figure that unions and, by extension, I suppose, the government is seeking. Do you have any quibbles with that number?
Well, Greg, I think from a business point of view, we're saying that an outcome of about 3.5%, that's fair and reasonable. That's consistent with the Reserve Bank's inflation target, 2 to 3%, plus an allowance for productivity, plus the fact that there's some extra superannuation coming through, an extra 0.5% in superannuation from the middle of the year. We would have real concerns with what the ACTU is saying, 7%. Honestly, we think that it's not responsible. And the other thing I think we've got to say here is that we would say they are really trying to put one over on the Fair Work Commission, on the government and on the public. All
right, but the coverage here is genuinely for the lowest of low paid in Australia, not always doing jobs that people would choose to do in other circumstances. Aren't they entitled to a degree of catch-up, given that they've been lagging behind inflation for some 2 years almost now?
Well, the thing that's going to serve the interests of the most vulnerable is to have a responsible wage increase that will ensure that they can stay in jobs. That's going to be the best way to get ahead, not to have an outcome which is going to feed back into costs, feed back into inflation and run the risk that interest rates are going to be higher. And I think this is the key point. What the ACTU are saying, honestly, their position is an attempt to hoodwink people, because in the end, it is those more vulnerable people, the ones on the lowest wages, they're the ones who run the risk of losing their jobs first in the event that the economy turns down and the Reserve Bank keeps raising interest rates. That's what we've got to avoid.
All right, well, you're nominating a very clear number here in the context of a minimum wage case. What about the general workforce, though? Do you apply that figure of, a bit over 3.5% as the optimum number that should be granted in other agreements?
Look, sure, and I think this is what we're seeing out in the marketplace. Agreements coming between 3 to 4%, I think is quite representative at the moment. We need to look no further than what we saw in the wage price index data yesterday, 3.7% over the past year, the highest now for more than 10 years. That's what we're seeing there. And the other thing,
it's still half of inflation, right? At 7%.
But this is the whole point. It's not about chasing inflation. It's about getting inflation under control. That's the number one objective that we've got to achieve, and we won't do that if we keep chasing after it. We've got to get costs under control. We've got to get those prices coming back to that 2 to 3% range. And I mean, one thing here, Greg, is look no further than what the Commonwealth is offering its own public servants. They're putting forward an offer of 4%, 3.5%, 3%. So, put their money where their mouth is. That's what they're offering to their public servants. That's what should be in front of the Commission.
All right, so you're saying that members or industry generally are reaching the end of their tether on the wage growth trajectory, are they? Well, what's the evidence, if that is the case, what is the evidence that it's hurting them?
Oh, look, I mean, here, one of the things, for small business, they are suffering at the moment. That's where the biggest risk is. You need to look no further than what we're seeing in terms of the most recent insolvencies data. That's at 3.5-year highs, so it has started to increase. So it is hurting smaller businesses. We're seeing profitability declining in a lot of those sectors, so there's a lot of talk about profitability. Outside of mining, which has had very high commodity price increases, and of course that's been paying into resolving the deficit situation for the government. That's where the real pain is.
But this is how markets work, don't they? When you have a shortage of labour, you can't find the staff, you pay a little more to get them. What's wrong
Well,
with
well, that's right. And as the price goes up, then so the demand begins to soften as well. And what we're seeing at the moment is across the economy, there are some sectors that are really starting to hurt. 11 interest rate increases are beginning to take their toll, and I think this is where it's going to be a very finely balanced situation going forward. But that is starting to hurt. Demand is coming off, and as a result of that, demand for employment is also starting to soften, and we're seeing that in the figures today.
All right, let's await the Commission's decision on that case. Can I take you, Andrew McKellar, to a broader question about the role of business in activism? I don't know if I want to say political activism, but activism in this country, because Peter Dutton has issued a call to arms to the gas industry today that if he became Prime Minister, he'd do certain things to repeal regulations for them. But he wants industry to do things with solidarity, to promote nuance and inject reason into public debate. Should business find and use a louder voice than it currently does in political matters?
Well, look, I don't think business needs any schooling or any encouragement. I mean, we will very strongly represent the issues that are of importance to our members and importance to the Australian economy. That's our role. Now, on energy policy, of course, there are some significant challenges, and some of the things he's pointing to in terms of the gas market, there are real issues there. And business is saying that. We're saying that publicly, and we're saying that to the government. We need long-term solutions. The situation in the gas market won't be solved in the long term by things like price caps. We have to have a clear signal that encourages firms, major international players, to continue to explore in Australia and to continue to produce in Australia, because gas is an important part of the transition.
Right, so you back this industry view, which has been expressed pretty loudly at the Adelaide conference with APPEA, that the government has either already gone too far or is at risk of going too far and threatening investment in that industry?
Well, we need long-term solutions, and at the end of the day, you can't solve a situation of inadequate supply by capping the price. You can only take some pressure off in the short term, but we have to have that longer term supply. We have to be able to get the gas out of the ground. We have to get it to market, and you know that's part of the reality. So,
and when should those caps come off in your?
Oh, we've got to get to that, I think, as soon as possible. It shouldn't be there for more than 12 months. What we have to do is provide signals about, you know, how we get the production back into the system and make sure that that's working effectively. That's the only way we're going to get the price down sustainably. Obviously, the international situation has been part and parcel of that, but we've got to be able to secure the supply for the domestic market as well as the export market.
Well, no matter who Peter Dutton was appealing to take up the cudgels, we can be certain that you kind of do that as your day job anyway. Andrew McKellar, thanks for joining us and arguing the toss today.
Thank you.